Hi, Ron LeGrand here. Before we get started with the podcast, I thought you might want to know that I recently recorded a 90-minute online training about how we make so much money today in the terms business. That's on pretty houses in pretty neighborhoods, not the junk houses that we have to go rehab or wholesale. I go through step by step on exactly what I and thousands of my students are doing right now to make the fastest and the easiest money in real estate without using your money or credit. If you're interested in doing just that, go to thementorpodcast.com/free training. See you there.
Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello, everybody. Welcome to another edition of the mentorpodcast.com. I have with me a very special guest today who happens to live in the same city as me. His name is Gregg Cohen, and he's built an empire, and I thought it would be a great idea for you to learn how he did that and what he's done, because what he's done is probably right up your alley. Now, listen closely, because you can actually duplicate what has Gregg done if you have the mind to. It don't make any difference where you live. So I'm not going to try to introduce what you have done, Gregg. You're probably better skilled at telling us that than me trying to read something here. So good to finally have you on here. It's been a long time. I think we met way back. I don't know what year it was when you came to my office, but it's not like we go out to dinner together or anything like that very often. So, but I do watch your growth, and you have done an amazing job of growing a very nice business. So tell us all about it.
Well, thank you, Ron. It's really a pleasure to be with you. And thank you so much for being on the podcast or having me on your podcast here. I can tell you, when I first started in 2006, all I heard about was Jacksonville was Ron LeGrand's territory. And so you have done so much for real estate investing, entrepreneurship, growing your business. I feel like we're all standing on the shoulders of you, right, when it comes to this space. So I appreciate you. Our story started in 2006, when the real estate market was very different than what it is today, but we always had this vision that we could build a real estate business. We found that most people went into real estate and thinking of it more or less as a hobby. And so my business partners and I got together, and, like most fledgling businesses, especially in real estate, we tried to be successful and survive in any number of ways. We tried wholesaling. We tried flipping houses. We tried subject twos. We tried lease options. We tried seller financing. We did everything. And we also built our own portfolio of rental properties. We became very good at understanding how to use smart debt. And in the first year and a half, we acquired 40 rental properties. And I was 23 at that time, and I had two business partners at that time. And we were both, all three of us were just a few snot-nosed kids. And so, but we acquired these 40 rental properties, and people started to take notice. And but then 2007 and 2008 happened. And while we were doing a lot of things and really becoming a jack of all trades and a master of none, it quickly became apparent what was working and what wasn't working. Right. And what we found was that the flipping business was struggling, like everybody who was in real estate at that time, as the market fell, right? As the home prices fell 35% in Jacksonville, we struggled. But it was this moment of epiphany where we looked at what was working in our business, and it was amazing. Those 40 rental units that we had, we spent very little time on. The rents continued to come in, even though market values dropped because the cash flow stayed consistent, because the job stayed consistent here. And we spent no time on that. But that was the thing in our business that was working. So from there, really as a method of surviving, we said, well, we need to really shift what we were doing. And that was, a long time ago, about 15 years ago now. And we decided to really kind of replicate our experience for others. And so now we've built a business which helps other folks build a rental property portfolio, and we get to serve over 1,300 clients. They live in 49 states and 13 countries, and they all invest with us here in Jacksonville, although none of them would call themselves real estate investors. They are busy professionals generally, and they get to invest in a wonderful market here, which you and I both love Jacksonville for a lot of reasons. Yeah. And we get to do all of that property management and asset management for them.
Yep. We even have our own football team here, don't we, Greg?
If you and I can figure out how to fix a football team, I mean, that's the one thing I think you and I can't figure out here in Jacksonville.
Yeah. So listen, your whole deal is you buy them, you fix them, you rehab them, and then you sell them to investors, and then you manage them for them. Is that correct?
It is, with one addition there. We build a lot of new construction homes for the purposes of renting them out.
So you started out buying them and rehab them. Now you just start building some of them. And then you sell them. Do you sell them at retail price, Greg?
We do.
Okay. So the investor buys at a retail price. They go to the bank, get a loan, or they write you a check. I imagine they do both, right?
Yeah, mainly about 60-70% of our closings are conventionally financed purchases.
Okay. And then you have an arrangement with them that you are become the property management company.
Exactly.
So how do you get paid? You get paid when you sell a house to them.
Mm-hmm.
Okay. You get paid when you manage the house.
Exactly.
Well, guess you get paid when you repair the house as well. I used to do the same thing, way back in the last century or so. I used to manage houses for other people. So then
tough work, huh?
Yeah, well, not for me, but for the team, yes.
Right. Yeah, you got to have a great team to support you.
And that was way back before we actually knew what kind of tenants to put in there that we didn't have to do much management on. Right. So are all your tenants rentals, or are any of them lease options?
We do not do lease options. And really because our strategy that our clients see a lot of value in is buying and holding for a full market cycle so they can maximize their benefits from all 5 profit centers. And so they're in for the long haul. And they're really comparing, you asked about buying at retail. This isn't really a strategy for those who want to find undervalued properties, because the folks that are investing in these properties are comparing how hard their money is working in the stock market or more traditional asset classes, and have probably always wanted to be in real estate, but didn't have the avenue to do it either because they don't have the time or the experience, or they're not local in a market that it would work. Sure. And so, they're looking for a team of professionals to handle everything, and they want it to be passive. They want it to be set it and forget it. And so they're in for the long haul. So lease options really aren't appealing to them.
Well, you and I probably ought to have that discussion sometime one-on-one. I bet I can change your mind on that one.
Yeah. I'm always open.
And I know you can change their mind on it because it's the best thing you could do for them, actually. But aside from that, is there a time by which you suggest to them when it's time for them to sell, or is that entirely up to them, or does anybody even talk about it?
We talk a lot about it. We talk a lot about it in the beginning, and then we talk about it. We have monthly phone calls with our clients to analyze their portfolio and whatnot. But, really before a client comes into this strategy, we're having conversations about making sure that they want to buy and hold for at least a 5-year period. And the reason there is because now lease options can be a great strategy where it really does decrease your selling, holding, and closing costs. So you're 100% right on that. For our clients, lease options may or may not be the best thing. Typically, it's not the best thing. I'm happy to hear your thoughts and advice on that. But from that 5-year period on, we really serve as a resource and as an advisor to helping them maximize their greatest return on investment. And, we've been lucky here in Jacksonville last year to see 15 to 20% appreciation, right? That's obviously not something we anticipated, but that's really wonderful for those who buy and hold assets. What I tell people is not to get too excited about the high highs in real estate appreciation, because I've also seen the low lows. But what I try to help and teach and coach is that real estate is cyclical. And over a certain number of years, if you look at the appreciation rates, either 10, 15, 20-year segments of time, they largely come back to what the normal appreciation rate is in that market. So you just got to be into it for a long enough period so that you can normalize yourself and get right back to that real estate cycle.
Well, I've been in it for 40 years, and you are absolutely correct. I've seen 6 cycles, and there's never been a time to where if it went down, did stay down long. 2008 hit us the hardest in my 40 years. But back in the mid 90s, we had the same kind of an issue when they changed the tax laws, but it wasn't as bad as 2008. But you hit on this, by the way. When the recession came and the values dropped 35% here in Jacksonville, the rents didn't. Right. In fact, in some places they went, look what they're doing now. Their rents are getting ridiculous right now.
I know, right?
I've never seen such an increase in rents. It's not just Jacksonville, believe me, it's all over the country.
Absolutely.
And I mean, and Jacksonville is just incredible. Of course, the values are going right up there with them. But your guys, they totally decide when to get out. You don't give them any input on
Yes.
that. You don't
So
suggest it. You don't
exactly. We're going to work with them, and the timeline is going to be different for every client. Generally, folks are looking to stay that 10 to 20 years in the asset. So it's a very long-term investment. But they get to make the decision because they own the asset. This isn't a pooling funds or a fund that they're a part of. They're the owner of that property or those 5 properties. And long-term, we are their property management resource if you just get down to the bolts of it.
And you don't have any percentage of ownership in their projects.
We do not.
Okay. I'm sure you've thought about that along the way.
We have, but, there's really, we're doing quite well as a company, and we really are investing in our clients' long-term success. And, if they buy at market value and they buy with the right team supporting them and they buy in a growth market like Jacksonville, I really try to help people see. And I know you and I feel the same way about this, that it's, this long-term growth, this appreciation that people think, oh my goodness, I don't really know how to evaluate that, or I don't really know, am I going to make my decision on how much I think it's going to appreciate over the next year? It's really not, that's not the way to win in real estate, right? It's buy and hold, understand that things are cyclical. And if you buy in the right market and you buy the right team with the right team supporting you, you're going to win. If you give it long enough.
Yep. And you hit it. People, get too busy wholesaling and rehabbing. They forget the real reason to own real estate, which we should name here, by the way. For those watching, there are people watching that don't know who you are, Gregg.
Oh, yeah?
Okay. So from all over the country. And I keep telling everybody, the longer you own a house, the more you're going to make, no exceptions. But they forget about the depreciation because that's not important unless you start making a lot of money. It doesn't matter that much to you. You start making money, it becomes very important.
Absolutely.
Get the appreciation, which is making a lot of people rich today just because they own real estate and they happen to be at the right time. And then they get the debt pay down. That's another big one people forget about. I mean, I can't tell you how many times I look back 5, 6, 7, 8, 9 years later. Oh my God, how did that thing get paid off that low? Geez,
what a beautiful thing, right?
2 years, that's what happened. And that's a lot of big money coming in today because of the combination of the appreciation and the debt pay down. People pick now as a time to sell. And then in our case, we do lease options. We get great big old multi-$1,000 front end deposits. And then, of course, most of the time they don't buy. So we get to do it again when they move later, which all your clients are missing, by the way.
So tell me more about that, Ron, if you don't mind. I mean, help me, educate me on lease options.
I put a tenant buyer. Your houses you're probably selling are somewhere around what, $250,000, $300,000, give or take?
Yeah, $250 on average.
Okay. Well, a $250,000 house is at least a $20,000 to $25,000 non-refundable option deposit.
Mm-hmm.
And it is always to people who can't qualify at a bank right now, which is actually 70% of the people who love to buy a house.
Right.
Okay. So I put them in there. They got plenty of time to fix whatever's broke, credit or debt ratio or whatever. Plenty of time. I usually put them in there for minimum 2 years. I don't move them at the end of 2 years. They want to stay, they stay. And guess what? A lot of them, I've got 10-year tenants been in there. Option expired 9 years ago. They don't care. But the cool thing is I pass all of the repairs on to them after the first 30 days. It's part of our option agreement. It's not a landlord-tenant thing now. It's a condition of the option. Mm-hmm. That's huge, man.
Yeah.
It means that we don't do any repairs. But that big front-end deposit is what that does to the rate of return on your investors' deal is just ridiculous. And then to be honest with you, Gregg, most of them don't buy. Yeah. They just don't buy. So they move and so your guys don't need to worry about losing the house. But if they lose one, so what? Here comes this great big old check. Go get them another one. There's no harm in actually getting money, especially when it's long-term capital gains. And I'll tell you the one of the real reasons that I love lease options is because they're tenant buyers. They're not tenants. They got a dog in the hunt. They got skin in the game. They don't pay the rent. They lose their option deposit. All closed with an attorney, incidentally. And they're just a different breed of tenant in my experience. I've had them all, Gregg. I was one time I had 276 HUD tenants in this city, if you can imagine. Yeah, that was when I had dark hair. Yeah.
Well, I know.
It just takes pretty much all the management out of the rental business and all of the repairs out of it. Yeah. So it's just a totally different game, actually.
I see a lot of value in what you're saying. And we had a similar experience. So when those first 40 rental properties that my business partners and I owned in the beginning, we tried lease options, and it was exactly your experience right there. It was nice to get those option deposits, although at that point they were lower value homes, and so the deposits were lower. So even more of an advantage to do it today. Yep. And you're right. The ownership mentality was there, even though they hadn't yet purchased that property, which, in essence, hopefully reduces maintenance costs. And then you're right as well that not a single one actually moved forward. It's just hard to change behavior patterns to do that. So
I put them in there. I don't ever move them out as long as they're paying the rent.
Yeah.
And, I don't send them a letter say your option expired. Yeah, no. They want to buy it later. We'll work it out. But
yeah.
The good thing is that it's just hardly any management to it. Collect the money, make the payment, and you're done.
Yeah.
But if you take a $25,000 deposit and return it to your investor, what does that do to the rate of return? I mean, what do they put down? 20%?
Oh yeah. Yeah. So 20%. So they're usually putting $50,000 down. So if you got a $25,000 pop, that would significantly increase your return on investment there.
Now they have infinity rate of return, which is kind of hard to beat, in addition to all the upside. Anyway, I didn't come on here to try to change your business model, but
I'm always interested, especially learning from somebody like you.
Okay. Talk to me about your team. I mean, you guys have grown. How many clients did you say you manage? How many houses are you managing right now?
We manage just over 4,300 homes here in Jacksonville. In the surrounding areas.
All in this area?
Yep. All in Northeast Florida.
All right. Well, that's a job in itself. That means you got a pretty good sized team.
No, it's just me. It's just me.
Yeah, right.
No, we have an amazing team. We have our count is at 82 teammates here at JWB, and some of the most highly talented, core value driven individuals. We spend a lot of time making sure that our culture is strong. We really feel like the culture is at the core of why we're successful as a business, why people choose to do business with us, and so. We bring great people on, and our great people do amazing things for our residents and for our clients.
Yeah, I hear good things about your entire operation. And I got to tell you, there's been similar operations that I've had way back in the past that did not keep their promises and got in trouble and went out of business and the like. It's easy to sell somebody something, make them a promise, but then deliver on it. That's the hard part. Oh, crap, I actually have to deliver this thing I just sold.
I know, right?
Yeah, which means I got to take care of the investor's needs. And I know you guys do a great job of that.
Thank you.
So you got how many houses would you say that you actually buy these houses first, don't you? All right. And then you sell them? Okay.
Yeah, we buy the houses and we buy land. We buy a lot more land than we even sell. We actually stockpile land. We've been doing that for almost a decade now. And that'll, of course, turn into new construction homes.
Yeah, I like land myself. But that means that all your gains are short-term capital gains, doesn't it?
They are. Yeah. Well, we also own a portfolio for ourselves of our own rental properties. We have over 300 rental properties that we continue to own in these same neighborhoods as our clients. But yeah, you're right. A lot of it's short-term.
Yeah. Okay. Well, that government ain't getting it all, at least not yet.
No, but there's a lot of strategies, right? There's opportunity zones. There's 1031 exchanges. There's a lot of opportunities. And then, of course, the depreciation that we get now more on the long-term assets that we hold, but that helps offset gains as well when you're an active investor. So there's a lot of tax advantages, although I wish everything was long-term capital gains there.
Well, just got to hold it for a year. What's the big deal?
True. Another reason to do the lease option, right?
Well, yeah, true. Though, there's a thought. I put the lease options in it, buy in there, and I hold it a year before I sell it.
Yeah, I get you.
Then you get to keep the deposit.
Yeah, that's interesting.
It's just a thought. Just talking here.
Yeah.
Okay, so you must have a bunch of people out there finding deals for you. I mean, what's your acquisition crew look like?
Well, so yes and no, right? Internally here, we have 3 folks out of 82 that are responsible for buying properties. And we bought 992 properties in 2021. So 3 individuals on our team, right? And the way that we...
That's saying something.
Yeah, the way that we do that is because we get to leverage our credibility and our reputation in the marketplace for being here for 16 years and following through on our word. You know how much that matters, especially in the real estate community here. So we have a network of wholesalers that come to us and know that we generally pay more in our neighborhoods to acquire land and to, buy, distressed houses. We're typically going to pay more than our competitors because the fact that we sell at market value, whereas other people don't, if they're looking to sell those properties. So we have this wonderful niche where, if it's in our neighborhoods that we're buying in, most wholesalers are going to come to us. And that's really how we, get to acquire really large sums of properties.
From what I see, you're pretty much buying in any neighborhood.
Yeah. And we're doing more of that now. And that's just kind of preparing for the future. The future really is that home prices are going to continue to go up is the way we see it. We see interest rates continuing to go up. So that's it's going to compress cash flow. It's going to make it harder for cash flow positive to be a thing. And so, rather than just going out there and finding a new neighborhood for us, it starts many years before we would ever put our name on it and then sell it to another client. So we're actively making investments in neighborhoods that we don't sell right now, buying those assets, building the land, building the house on the land, or renovating the property. And then we do hold it internally and we make sure that we can deliver on the promises that we're making. And then eventually that may turn into cash flow and assets for our clients out there.
So you probably build 1,200-1,500 square foot houses?
Yeah. And it'll go up to maybe about 1,800 square feet.
What is your cost to build a house per foot nowadays?
Man, it used to be a lot lower.
Excluding the land.
Let me see here. I'll run a quick calculation here. So, I'm guessing we're probably, new construction costs are way up. Let's say 120,
27% for your information.
Yeah, exactly. I feel it. You're probably about $100 a square foot now.
Right? Even that's a pretty good feat.
Yeah.
Keep it at 100.
It used to be like $60 a square foot.
I remember.
It was
about $60-65. Didn't include the land.
No.
And that is totally done. Ready to sell. But to do it for $100 a foot right now means you got your hand around the numbers pretty good. So you constantly building them. You got people just go from one house to the other. Or
so last year we built about 250 homes. We started about 500 homes that we started last year. And so, we have really ramped. It's been hard to keep up with demand because single family rental properties in a market like Jacksonville, it is the hottest asset class over the last year. You got, institutionally, you got $30 billion of money coming in from the institutional players out there, specifically in this asset class, and they're targeting markets like Jacksonville. So it's been hard to keep up with demand, even though we don't sell to institutions. We sell to what I would call mom and pop investors, like folks that want to buy between 5 to 15 rental properties.
Well, don't mention this lease option stuff now to Blackstone and the rest of them.
No,
they might catch on. We don't want.
We don't want that, right?
No, we don't want. So when you started this, I imagine you were probably maybe still use private lenders to fund your deals.
We still do.
You're raising a lot of capital today to continue this funding.
Yes,
and simultaneously, probably some of it from the same people you're selling to would be my guess. Is that right?
You know the business well, Ron. Absolutely. Yeah. We've borrowed over $300 million in private lender funds. And we paid everybody back 100%.
You pay it back when your person goes and gets a loan. What kind of rate are you paying your private investors?
We pay 10%.
Man, that's high.
I figured you were going to say that. I know you know a lot of ways to be able to drop that cost.
Well, to be honest, Greg, that's just a bad habit that you haven't gotten out of. You don't have to pay 10%. All across the country,
I'm with you. It's one of our highest expenses out there, as you would imagine, with the type of volume that we're doing.
It's a new year, Greg.
I love where you're going. Ron.
7% is just as good as 10% to most people that don't have any idea that what a private lender is anyway. And honestly, a lot of my people are getting it even cheaper than that. I don't really want to pay less than 7%. I want the investor to feel like but think about it. That's 7 times more than what they're getting in a bank account, for crying out loud.
It's still a deal. For us, it's operating at scale. We really felt like, especially over the last few years, quite honestly, we could have dropped the rate. But we saw a market opportunity. We saw that the market we felt was going to go up. I won't say that we saw it going up 15 to 20% last year. That wouldn't be true, but we did see it going up. And we felt like we were in a race against time to acquire land and to build it out so that our clients could have a runway of cash flow and inventory. So that's a part of it. But I'm with you, big picture.
Are you just buying individual lots, or are you just building out whole subdivisions?
We're building individual lots. So we are buying, infill lots, for those who aren't familiar with it, right?
Already got the utilities.
Already platted, right? With the neighbor, with the utilities and the streets and the curbs and whatnot. And we buy those lots that are there that either weren't built on, or maybe there was a distressed house. And we have to go knock it down and build up a brand new one. So that's our niche.
Yeah. Ever thought about building your whole subdivision? Ever explored it? Yeah.
You know, we are taking small steps towards doing that. I really think that's the future, right?
Yeah.
You're seeing the institutional players out there. There is an adoption of single family rental properties as an asset class. There's a tremendous amount of money coming into the space, and it's all because they've now been able to kind of vet this rental property community model, and they see that the residency value and at long-term rents continue to go up. There's not this stigma against it like people were fearing.
Yeah,
and so we're taking small calculated steps to do that too.
Even if there is, you're building the whole subdivision to ultimately rent out anyway. You make the rules. Nobody else is going to make them for you.
Exactly.
And I see all 12 to 1,500 square foot houses, and there's subdivisions like that all over Jacksonville. In fact, they're my favorite kind of houses to buy. But I mean, I'm just thinking, I'm just going to put 200 houses down at one time and 200 lots down at one time. And
the development, though,
big advantage you got is I've done several subdivisions.
Yeah,
I just did them to sell the lots, but for the most part, so I had to make a profit.
Yeah,
crap, you don't even have to make a profit on developing the lots. You just in it for the house and the upside on top of that. That puts you at a distinct advantage, big time. Construction costs are going up, but still, so are the prices of the houses that you're selling. All right.
How did you like horizontal development? Because that's a bear. We're taking small steps there because that's a long. It's
only a bear because of the time it takes. But frankly, what do? You hire an engineer, you hire an attorney, and you don't do anything else.
You put a lot of capital at risk.
No, I'm serious. That's all I ever did, and they were in other states. Not standing out there every day watching them turn to dirt. Yeah, a project manager. That's what they're supposed to do on the job. So I found it very easy to build them.
Yep.
Pain in the neck getting all the permits and everything in place, but I don't do that either. That's what we hire an attorney to do.
Yep.
And I've done several of those actually. So, what's your exit strategy? What do you want to do when you grow up?
My business partners and I, being 16 years into this, it's a conversation that we've had more in the last few years, and we see ourselves doing this for the long haul. And many people, when I tell that to it, they're like, you're not being truthful. But we've had a lot of these conversations, and I say to myself, so let me preface this. Before I got into this business, I came from corporate America, and I came from a poor working experience. I also know about myself that I like to be a part of a team. I like to be a part of something greater than myself. As I'm thinking about future opportunities, if I was to sell JWB, if my business partners and I were to sell JWB, we would have a nice cash windfall, but cash is the most important thing to me, right? But that type of financial windfall wouldn't change my life, wouldn't change what I do every single day. So what's really more important to me now that I have the financial part taken care of is creating a lifestyle that I'm excited about every single day. And a part of that is working. I would be a nutcase if I wasn't working.
Yeah, I understand.
So, and then it's that, we put a lot of time and effort into building this really awesome team. I come to work every day, and I'm surrounded by people that I genuinely enjoy being around. My business partners and I, we feel like this is, clearly we'll continue to be able to do things that I think are, more in line with what our personal goals are. That's probably what you do as a business owner as you get older and older. But I think we're in for the long haul, and it's really genuine.
Okay. Well, basically what that tells me is that I just asked a question too early in your life. That's all.
That's what everybody tells me. And maybe that's true.
Well, you are young, man. You're about somewhere around the age now that I was when I first started in real estate. So you got a really big head start on here.
Yeah.
I envy you for that. You built a really nice empire. So tell me, what's the biggest mistake you made so far?
Oh man, it's pretty clear. Early on in our business, let's see, this was 2013, 2014, I guess 2012, 2013, 14. 2012 was like the first year that JWB kind of really made it, I will say. Like we went from like 60 sales the previous year to 175 sales. We were very profitable. Our team was there. We probably had 20 folks on the team at that point. We had nailed our message. We knew it was turnkey rental properties in Jacksonville. We were moving, and we made the mistake that we just became, we didn't respect how hard it was to build up and have some success. We kind of had shiny object syndrome, and we saw that just because we were good at turnkey rental properties, we would also be good at flipping high-end homes. And we would also be good at X. We would also be good at running our own mortgage company. We would also be good at selling, being a real estate brokerage. We would also be good at all of these things. And we became really going back to like the first years in business, we were a jack of all trades and a master of none. Well, the only thing was at this point, we had 25 other folks on our team, 30 folks on our team who were counting on us to make very good decisions. And ultimately what we did is we distracted the hell out of our team, and our business really suffered for a couple of years. And I'll never forget how hard it was. It's easy to know what the biggest mistake was, because we had to have the one and only layoff in JWB history. We had to let go 7 people on our team. And it was very, very difficult. I still get choked up thinking about it. So
I understand, sir. We had to lay off half our team after September of 2008 in one day. In one day, half
that sticks with you, huh?
Oh God, you don't forget that. That's a tough day. So your biggest mistake was shiny object syndrome, trying to do too much and do everything, be all things to all people. And I'm telling you right now, I have not met very many entrepreneurs that haven't made that mistake. Right?
Yeah, right.
Including this one, by the way.
Yeah,
and it's very easy to do. And I sometimes I think the reason that we've been around so long is because we stopped doing that nonsense and stick to what we do best, which is the training people to do what you do, basically. Yeah.
Once you find sort of like what the market opportunity is and what you are built to do as a team, as a company, like the language you speak, what you're fired up about, like that for us it is turnkey rental properties, but it took a while to figure that out. And once you know that, we take very small additional steps, right? They're very calculated if we're going to go slightly outside that space. And it's always with that belief that the team is the reason why people invest with us, and we can't shake or disrupt or distract us from what gives us the opportunity to be here.
That's smart thinking. So all the listeners that are watching you right now obviously have interest in buying real estate. And so they come from all walks of life, all vocations or no vocations, all financial situations, from all kinds of backgrounds. From your experience, and you get one piece of advice. What is it?
My one piece of advice.
Yeah, I don't want to put you on the spot or anything like that.
Well, I just had like 3 or 4 that I was going to rattle off. I'm glad you limited me. I'm quite a talker here.
You can do 2 or 3 if you want.
My one piece of advice would be to get out there and try to sell something, right? Like it was so many of us think about, well, I'm going to put so much time and effort into, is this going to work? And then we fire ourselves up into believing it. And then we spend so much time analyzing it. And then we spend so much wasted time before we go and ask somebody to buy something that we're offering. And the real value, your end client, your potential client, or the client who doesn't buy from you will tell you everything you need to know. And so I just think that if I go, and it's a little bit different now because we have, a large number of clients and we have more responsibility and more to protect here. So it's not like we roll this out, 16 years into building this business at JWB at the same velocity. But when I think about in the beginning, right, it was, let's go out and try to sell something. And then let's just be aware, how did it work? And let's learn from this and try to create value for folks. That would be my one piece of advice, especially, and that's more geared towards somebody who is early on in business, early on in real estate.
So what you really said was nothing happens until something is sold. And all of us are selling every single day, whether we look at it that way or not. Absolutely. One way or the other, we're selling, if nothing more than selling ourselves. Some people have a little trouble absorbing that. You know that, Greg. I don't want to sell. Oh, yeah, you do. Yeah, you do. You sell your kids every day.
Oh, yeah. Absolutely. Every single day. Before I wake up in the morning, my kids are, coming into my bed and I'm selling them on, either letting me sleep a little longer or I'm selling them on going back to their bed or whatever it is. Right. I mean,
so how many hours you work a week?
Right now it's about 40, 45 hours a week.
Yeah. So you actually work that. Now I'm not talking about the time you think about it. I'm talking about the time you actually work. So you work at home a lot?
Lately, the last few years, I've really made a concerted effort not to. I'm an early riser, so I'm always up early in the morning and I'll put in an hour before the workday starts or whatnot. But, for so many years, I mean, those number of hours per week were 80. I
can almost remember. So how did COVID affect you, 2020?
Man, I'll tell you, everybody was really scared in the beginning. We started to do a podcast and a show, and it started in January of 2020. And I was very uncomfortable being on camera or being a thought leader. And I remember I thought, oh, okay, well, I'm going to kind of go into this slowly. We only had maybe like 5 or 10 people that were watching at that time. And then all of a sudden, March 2020 COVID hit, and, our entire client base was tuning in because everybody was virtual and everybody was very scared. And so I got an early trial by fire there. So it was scary for our clients in the beginning. But, the thing that I just kept telling people, I said, I didn't really know the answers, but I know that rental properties are a consistent asset class because you're investing in a critical need, and it's a critical need for a person, and it's a critical need for a government. And that's what we saw played out, right? Yep. Obviously, there was a lot of stimulus that went to go and help people pay rent in their home, either by the direct payments or unemployment. And that was done largely to make sure that people were in their homes. We also know the government did other things like eviction moratoriums, which kept people in their homes, which is not a large fan on for the length of it. But rental properties performed really well. Single family rental properties.
Always will. People always have to have a place to live.
That's right. So, and it wasn't just a JW. I mean, our rent collection was 98% in 2020. 98% of rents collected. Mine
was 100. Never even have anybody threaten not to pay, because if they did, they lose their deposit.
Oh, there you go. I like it. I like it. So how many homes are you managing with lease options right now? On lease options?
I don't even know. But no, we never even had, I don't think we even had anybody really late out of the ordinary.
That's a beautiful thing.
But God, you just said something. I had something important I was going to say, and I totally forgot what it was, man. Now, something you just said triggered it. As a company, we at Global Publishing, we did better in 2020 by far than we did in 2019, because we didn't have to go out on the road and do events, and we had saved all those costs, and our net was way up over. But scared the hell out of us for about 2 weeks.
Yeah,
because we were already doing virtual, and now we're doing half and half kind of. You just adapt. That's a big business lesson. I can't. Here's what I'm telling everybody: you can steal this if you want. Yep. Take care of your house, and you won't worry about what's going on in the White House.
Oh man, I love that. I absolutely agree with that.
Because it's true. It's all about that cash flow. Well, listen, gee whiz, do you realize we're already over time? But I don't care. Listen, it's been great having you. Fun talking to you. So you got a podcast?
I do. I host a show called the Not Your Average Investor Show, and we go live every Tuesday and Thursday on our in our Zoom meeting. And
interview me.
Yeah.
I'll think of something important to say.
Hey, listen, we've got we can talk about lease options for sure. Right?
Just set it up. Okay. We appreciate you taking the time to spend with us today. Honestly, it's actually good talking to you again.
Ron, likewise. It's great to catch up again. Hope we get together soon.
You are a shining example of what one can do once they set their mind to do it. So
means a lot, Ron. Means a lot. I'm just going to let that marinate for a little bit. I really appreciate those kind words.
You've done well. I've been watching you behind the scenes for a lot of years.
Yeah. Right? I didn't know you knew who I was.
I know who you were. I live in this city, remember? In fact, I even get your magazine thing your newsletter that you send out.
Oh yeah?
Yeah. I actually even read it sometimes.
I write that one just for you, Ron. You're the only person I write that for.
You're pretty good at keeping up with the times and the economy and the predictions as well. So that's kind of a cool thing. I read that. And over the years, I've learned to appreciate the quality of the business that you run. Glad to know you. Glad to have you.
Thank you. I know you're a straight shooter, and you tell people the truth. And so when you say those kind of words, it means a lot. And like I said, throughout my career, I've known and watched what you have done over your current career, and the longevity and the success and the amount of students. I mean, I have 3 or 4 folks in my close personal circle that invested with you, are a student of yours, worked for you, and they all rave about their experience of just being connected with you. So Really appreciate what you've done as well.
I'm glad to hear that. Too bad you didn't come to one of my lease option classes way back when.
I know. I could have.
Never mind. Forget it. I'm sorry I said it.
Hey, listen, if you sent me a newsletter and told me about it and put it on my doorstep, then maybe I'd know about it.
Well, apparently you're not on my mailing list. That means you haven't given us any money. So, fix that.
Let's change that up. All right, Ron, I appreciate you, buddy.
Okay, you too, sir. Always a pleasure. Thanks. See you soon.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.